Hey guys, I wanted to hop on quickly because this is a very strong earnings week. And a lot of people think that earnings will make them millionaires or they're going to be the perfect trader with trading around earnings. But I just wanted you to get a glimpse of what happens and how much volatility and how much activity is on the chain when you trade around earnings. Now, if you haven't been following me, I'm Dr. Chaz, retired pharmacist. I teach people how to trade options, and I have been harping on everybody getting some shares and getting into trading SoFi. SoFi has a strong financial aspect to them as far as savings accounts, checking accounts, options, mortgages, crypto. They're getting into the crypto space and student loans. So, and they have earnings tomorrow. I've been following them since May, listening to their earnings and a little bit before that, but that was when I first started listening to the earnings calls, and they just have a strong, solid foundation as a company, and I see a lot of growth in them and them getting implemented into the S&P 500. So, I'm already in a contract. It's not going to expire this week. My contract does not expire until January 16th of 2026. But with their earnings being tomorrow, you can see there is hella implied volatility on the chain, and there's a very robust open interest um, and volume. Also, along with that, you're going to have higher theta and higher deltas for tomorrow with anticipation of a big move. No, am I in contract for tomorrow? No, I don't want to be impacted by news or some pullback, and these contracts are going to either spike hard or spike down, depending on whether you're in the right direction. I'm looking for them to move at least $1, maybe two, tomorrow up to about 32, and by the end of the year my target on them is $40. That is why I'm in the $40 contract, but I'm not in the $40 contract that expires at the end of the week, which was $11. You could still probably have some activity on it tomorrow. With the delta, you got it for $11. If we get that $2 move, you're gonna make $10, and that theta should be a little negligible. But for the contract that I'm in, whether we move up or down, I'm still going to be in safety just because of how much time I bought. This is the contract that I'm in. So if you quite compare, I'm in a 40 strike. It cost me, I think, 80, $94 maybe. My contract was almost at 100% today. So I think that's the wrong price of that contract. So let me grab the price of my my contract when I purchased it. Oh snap! I forgot I had a contract. God dang! Y'all would not believe this. I was in a contract on a spot call, and I did not close that bad boy. I forgot I was even in it, and it spiked from $14 to 24, but I forgot to close it. Silly me. Oh, it don't expire till tomorrow. Oh, so I'm super straight. I thought I had the wrong contract, so that thing should be nice tomorrow because it was up $6. Sorry for my tangent, but my SoFi 40 call, I got in at $71. At the close of today, that contract was worth 133. So right here, and my return is up 87%. I told my client we were trading together, we're trading this contract together. Hey, you can close today. You don't have to swing it through tomorrow, but we should be really good. I said if I hit 100% today, I'm definitely going to close it because it's enough profit. I don't have to be greedy and I can always get back in. I did that, and I even on the contract that I previously put out, which was the 200 strike. This contract started out at $86. Silly me closed it super early, and now that contract is over $1,000, and it was only 86 back in May. So again, this contract would have paid for your Christmas presents and shopping or vacation back in May for this coming term, and we're still that contract still has 2 more months on it and still plenty of room to grow. So again, I wanted you to see the volatility and how much the cost in comparison to trading that weekly contract or getting a little bit more time. I also have it's much less volatile. I have a nice delta and very low theta. My theta is not affecting me at all in this contract. So remember that when you're trading around earnings, they're going to be mega earnings this week. Let's see if I can pull that one up. This is Earning Whisperer on Twitter. Big ones today: Waste Management, Bed Bath and Beyond, NXP for tomorrow before the open. SoFi, PayPal, UPS. I'm really going to be looking at UPS. DR Horton, another trader, and I thought she trades DR Horton really well. I never get into them. Their train is a little thin for me. Looked at Royal Caribbean and also Carnival Cruise Line with another client. Big one. Enphase, Visa, Heritage Homes and Cheesecake Factory. Y'all told Cheesecake Factory up about it being not an upscale restaurant. Let's see how they're reporting on people still eating it out or people still engaging with them. Come Wednesday, Verizon, Meta, Microsoft, Apple, Chipotle, CVS, Caterpillar, Carvana, Etsy, ADP, all the heavy hitters. And then coming up on Thursday, Amazon, Apple, Coinbase, Reddit, Rocket, Roblox, Roku. I'm really interested in Roku. We have Riot in the crypto space. You got Coinbase in the crypto space. And then at the end of the week, you have following up on Thursday, Lilly, Merck, and then Ambi on Friday. I've been looking at a lot of the healthcare company or pharmaceutical companies. A lot of them are just diving big. It used to be what's the cure for something? And none of them are really looking for cures. They want to keep you stable because if they cure it, you're never going to come back. That's the problem or their business model is to keep you on that medication for as long as possible, so you need it and keep you as a customer. So I'm looking at Lilly, Merck, and Ambi on how they're doing in the weight loss industry. Are they sticking with injectables, which have been in limited supply? Are they going to switch to something more oral? So I'll be listening to their earnings calls. But again, you're going to see these chains very inflated. Usually you can trade Apple and Amazon under $100. Under $200 in strike prices, but those strike prices are going to be inflated this week. So if you do plan to trade them, wait till the day before. If you're going to trade through, it is going to be a very, very 50-50 gamble on what the company's going to do and how those premiums are going to swing. But see, these Amazon swings, you're over 600. For the average retail trader, this is probably out of your budget. If you're brand new to trading, stay your butt on the sideline. Don't try to get into these positions right now. If you have a ticker you want me to look at, drop it in the chat. If you got some questions, I'm only going to be on here about 6 more minutes. This was just going to be a quick one. I did make a post about hopium. And we having a Traders Anonymous group this evening. If you guys want to hop in, want to talk to somebody who's traded, I'll even show you my profits today. Like I was down like $36 today because the market was choppy. I got kicked out of my plays. It would hit my stop, go back, hit my stop. So I just had to counter it at the end and just minimize my losses. But I think a lot of the misconception is if you're an analyst or you're a day trader or you're a full-time trader, you never have a loss. And that's totally not true. So I wanted a space for us to come to. If anybody wants to talk, I will put that up. If I get 10 likes, if I get 10 likes and 10 shares and you guys say, yeah, I want to show up, I'll host a Zoom and we can talk about the market. You guys can ask questions. It'll be like a free open office. I just wanted that to provide for people because I know starting this journey now, or if you hadn't been in this journey back in 2021, 2022, or if you've traded from 21 to 22 to now, you're probably conflicted in your emotions about how you're trading. You're like, hey, the markets are not moving like they used to. I'm making more losses than wins, or I'm not doing something. I'm just off a little bit. And it's really not you. Give yourself some grace. It's really the market and under the establishment that we're trading under in the conditions. So don't put so much on yourself. Give yourself a little bit of grace because the market is trading under different conditions, which is changing how you're actually trading. So if you guys want to hop on later, want to do a Hopi Moon anonymous group here at 7, I'll send a link out private. I won't put it to public because sometimes we have Zoom crashers in there. But if you guys want that, I'll bring it this evening. Answer some questions, talk about the markets, look at a couple of earnings. But just know that these contracts are going to be a bit inflated this week. So what your usual premiums are, they're going to be spiked a lot. I'm very bullish on this week. I'm bullish going into the end of the year. Some of my targets, I don't want to spill too much, but I am looking at SPY on those December and January contracts. Seasonality, I'm a big person on seasonality. So if you Google equity clock, go look at SPY seasonality. Look how we move in the last 2 months. That'll give you an idea of what strike prices I'm looking for. I like to go hunt the chain and see where the market's moving. I My target was $2 up on the spot today, and it just held and kind of consolidated, and then made that little pop. So I wasn't wrong. I was a little early. And I had a shirt mate that says that all the time. I wasn't wrong. I was just early when you're trading. And sometimes it happens. It's okay. Give yourself some grace. So, again, you can see those spikes on Apple. Let's look at Lily. Lily's always premiums are fairly high. So I'm pretty sure most, again, average people are not getting into these premiums. These premiums are well over $22,000. So, yeah, we probably won't be touching those. Let's see who else that we have. I know I said Lily. We got CVS. But again, this is what you will see, and this is the one that almost kind of change, kind of save some of retail traders from getting smacked by not letting you get take advantage of those big booming moves in the market around earnings. But it also, I mean, it could grow your account. It can also blow your account. So just be mindful that these contracts are going to be inflated on some of the companies that are reporting that week. You got Google, you got Chipotle, Microsoft, Meta, Amazon, Apple, Coinbase, Reddit. If you want to get in on Coinbase and you think Coinbase is going to be bullish, I'd say take a look at the YieldMax ETF. If you don't know what it is, you should drop in the chat what's YieldMax ETFs, and I'll go over that. But I don't want to steer people too long. Got 2 more minutes. If you like it, share it out again. If you want to come back on and we do that Hopium Anonymous later on, let me know. But again, just wanted to let you know how premiums were going to be this week. Give yourself some grace if you're kind of falling by the wayside, if you're not trading in your same rhythm that you did about 2 or 3 years ago. It's okay. Give yourself some grace. If you're brand new to the market, again, give yourself some grace and kind of sit down on some of these trades, journal what you're seeing, so you can know how to play them in the future. Because every quarter we're going to get to do this again, so you're not going to be missing out. We're going to get another opportunity again to make these type of moves. So be mindful. Risk management. Don't go out here trading more than 50% of your account. Stay safe.